Hello learners, I hope you all are doing good and fine. In our today's video, we will be doing the revision of IFRS 13, fair value, an important topic for SBR. So once we are done with the concept, we will see some basic questions. After that, I will be saying what are the types of questions which are frequently repeated in ACCA SBR exam. And after your revision of IFRS 13, I will provide a list of past papers which you have to do it. So once the concept is done, do the past papers so you'll be good with the topic. So let us start IFRS 13 revision, that is your fair value in 3 2 1 and go. Chalo, IFRS 13 sir, fair value, a very important topic. Now this standard will only teach the determination of fair value. How should we calculate the fair value? Because we have seen a lot of standards where we use the concept of fair value. So this standard will teach the calculation of fair value. Will this standard teach when to apply your fair value? Will this standard teach when to apply fair value? No. That we will cover under respective IS and IFRS. So fair value. So see the scope now. IFRS 13 will not apply to. IFRS 13 will not apply to inventory because in NRV calculation it's a entity specific, whereas fair value is market specific. IS 36 impairment. When in impairment we have value in use calculation, there also we will not apply IFRS 13 because IS 36 provides the guidance for the calculation of value in use. Then IFRS 2 share based payment, in which we have fair value of the option. We will not use this IFRS 13 to calculate this. Here your AFM knowledge will be used. Then sir, IFRS 16 leases. In this also, in leases, when we decide whether it's a finance lease or operating lease, we have one point, one indicator, if you remember. Present value of the lease payment amount to substantially all the fair value of the underlying asset. The fair value of the underlying asset is defined by IFRS 16 only. It's not defined by that by IFRS 13. It's defined by IFRS 16 only. So these are the four standards where IFRS 13 will not apply. So now coming to the definition, a very important part. So what is fair value, sir? Fair value is the price that would be received to sell an asset. If I want to sell the asset, not purchase, I want to sell the asset, I want to exit from this, or pay to transfer a liability. It's transfer, not settlement of the liability. If I want to transfer the liability today, how much will I pay to someone? So in that case, we consider this price. So it's an exit price, not an entry price. First point. In an orderly transaction. So what does orderly transaction means? Transaction is not forced. Transaction is not forced. It is at arm's length transaction. Orderly transaction means as per the market terms, it should be at arm's length transaction and the transaction should not be forced between market participants. So it should be between a buyer and a seller. So when do we say market participant? Market participant means they are independent. The market participants should be independent buyers and sellers. They should have the knowledge, willingness should be there, ability should be there, and intention should be there to do the sales transaction. Then we say it's a market participant, and market participant should have the knowledge regarding that transaction. At a measurement date, it's at a measurement date. Fair value is not calculated for a period, it is calculated at a day when you need the fair value. See, at date, not for a period. So this is your definition of fair value. Fair value is the price that would be received to sell a asset or paid to transfer a liability in an orderly transaction between market participants at measurement date. Now, one more important point. When we calculate the fair value, entity specific restrictions should not be considered. Okay, whatever restrictions are on the entity, we will not consider it. But if the restrictions are asset specific, we will consider it. So let us see an example here. See now, entity A is there, entity B is there. Entity A has a land. This land can be used for agriculture purpose, your residential purpose, commercial purpose. But entity A is saying that it's not our objective, it is not our objective to use this land for commercial purpose. But can I say if this land belongs to some other entity in a market, they will consider this for commercial purpose. So entity restriction will not be considered. So this is an entity restriction. But as for the market participants will consider this, that if we are getting more benefit by using this land for commercial purpose, we will consider. So but when we calculate the fair value, we consider commercial use. Why? Entity restriction will not be considered. We will consider asset specific restriction. If the government is saying that this land cannot be used for commercial purpose, then we will not consider this commercial use of this building for the fair value calculation. So I hope this concept is also clear to you. Then coming to fair value measurement assumes what? The transaction to sell the asset of or pay to transfer a liability. Now, which market, sir? The market should be the principal market. There are two types of market: principal market, most advantageous market. So the preference should be given to what's a principal market. Your principal market is also known as what? Your active market. So what does this mean, sir? Active market or principal market means the where the transactions are in high volume. So high volume of transactions, wherever in whichever market the volume of transactions are very high, we say it's a principal market. Sir, if principal market is not available, then we use most advantageous market. What does most advantageous market means? See here now. Most advantageous market means where you get the maximum benefit for an asset, but to transfer a liability, you pay a minimum amount. So most advantageous market and principal market. So see here an example. I want to calculate the fair value of Reliance shares. So I say on NSE, these are two different markets. NSE, the price is 2010. Here the price is 220. Many students will say, sir, BSc, this 220 should be a fair value. But no, the concept says what? Principal market. So principal market is what? Principal market is where the volume of transactions are very high. So can I say the volume of transaction in NSE are very high? Even though the price is less, the price is more in BSc. But which one will be the principal market? The principal market will be NSE, not BSc. So what is your principal market? Principal market is where the transactions are very high. Answer: how should we calculate the fair value? To calculate the fair value, we'll consider the price of the asset or liability less transportation cost. Understand, whenever fair value calculation comes into picture, transportation cost will be considered, but transaction cost will be excluded. We will not consider transaction cost. Why? What is the reason? Transaction cost is not considered because it is entity specific, whereas transport cost is based on market perspective. If I want to transport a machine from this location to the market, it's specific. So in this case, we say transportation cost is in market specific, whereas transaction cost is entity specific, and it will not be considered for fair value calculation for principal market. Sir, if principal market nahi mil raha, it is difficult to identify principal market. Then we say we look to most advantageous market. When there are 3 to 4 principal market, it's a confusion for the entity to identify which is the to identify which is the principal market. Then we use the concept of most advantageous market. So most advantageous market, as explained, where the amount which you get for asset is maximum, for liability you pay is the minimum. So here we have to follow two steps. The first step is what? To identify which market is the most advantageous market. First thing, you have to calculate and identify which market is the most advantageous, whether Karnataka, Rajasthan, or you'd say Kerala, Tamil Nadu, etc. You have to identify which market is providing you the maximum benefit. When you do this calculation, you take the price of the asset, less transportation, less transaction cost. Here we will include transaction cost. We will consider transaction cost so that we get the net amount which we have received by selling an asset. Now, when you do this for 3 to 4 markets, you get the market which will provide you the most benefit or the higher benefit. Consider that market will be used to calculate what? The fair value. So when you calculate the fair value, you will consider what? Price of the asset or liability less transportation cost. Less transportation cost. See, to calculate most advantageous market, we consider transaction cost. But once most advantageous market is done, we only consider what's a transportation cost for the calculation of fair value. So I hope this is clear to everyone. So see, transportation cost means the cost that would be incurred to transport the asset from one location to other location. Which locations are? Principal market or most advantageous market. Transaction cost should be considered only while determining the most advantageous market. Transaction cost, why I mentioned, it's an entity specific, it's not an asset specific. So with this, I hope this is clear to everyone. Then chalo, then determining the price of asset or liability, the hierarchy, the level of hierarchy. That means IFRS 13 says what? When you calculate the fair value, you have to use the market data. Maximize the use of observable data. That means the market data should be used. So see here now. Level 1, observable inputs, quoted price of an identical asset or liability in an active market, which we have done above for Reliance company. So here we are using the market data. It's not based on the entity's data. So the aim is what here? To use as much as possible the market data. Try to maximize the observable inputs to calculate your fair value. Sir, if that is not available, if Reliance company was not listed, then what should we do? Then you see any other company which is doing the same business like Reliance. You will take that price, you will do some adjustments. So observable inputs, your level 2 will say what? Quoted price for similar assets or liability in an active market, quoted price for identical assets or liabilities in less active market. So here in both the cases, adjustments are required. When we come to level 2, adjustments will be required so that you get the correct value. Observable inputs like interest rate, etc., are used to calculate the fair value. Whenever there is an adjustment, we say it's a level 2, not level 1. So level 3, in level 3, see level 3 priority, the priority which is given to level 3 is the least. Why? As mentioned, market data should be given the most priority. You should maximize the observable inputs as IFRS 13 says. So in level 3, unobservable inputs, that means we use the entities data. We consider the entities data like what? Present value of the future cash flow, which we use in the calculation of your when we calculate the present value of the dismantling cost, etc. In that case, we consider the present value calculation. This should be given the least priority because this will use what? This will use entity data based on the judgment or based on the forecast. So the level 1 and level 2 should be given the priority. If level 1, level 2 is not available, then level 3 should be given the priority. I hope this is also clear. Then, sir, for non-financial asset, IFRS 13 provides specific guidance for non-financial asset. In case of non-financial asset, sir, how should we calculate the fair value? In case of non-financial asset, the entity should consider highest and best use of the asset. We should consider the highest and best use. So as I've taken an example above, this is a land. As of now, I'm using this for my agriculture purpose. But if I want to calculate the fair value, what will I see? What are the other options? I say residential purpose, commercial purpose. The commercial purpose is providing me the more benefit. So in that case, I will say when I calculate the fair value, I will consider from the point of view of as a commercial property and I will calculate the value. So highest and best use. Highest and best use takes into account the use of the asset, that is all the three conditions should be met. When you say agriculture, residential and commercial, to meet this, whether you can consider commercial or not, three criteria should be satisfied. That is physically possible. It should be physically possible. It's feasible for the entity considering the asset, size, location of the asset. Then, sir, legally permissible. It's not legally permitted, it is legally permissible. It must not have some restriction by the law. So, must comply with laws, regulations, or there should be no such restriction. Then, sir, financially feasible must it must generate profit or positive economic return, and funds also should be available with the company so that they can convert this. And it should be practically possible to do in the market. The company should generate benefit out of this. Then we say we can consider this. To consider highest and best use of the asset, all these three conditions should be satisfied: physically possible, legally permissible, and financially feasible. Then if these conditions are satisfied, then you can consider the value. Now when you calculate the value, we will consider the transformation cost. Transformation cost we consider, we reduce from that fair value and calculate it. I hope with this is clear. Then sir, valuation technique. So the valuation techniques are what? Market approach, cost approach, income approach. When should we use this market approach, this valuation technique? We will use the valuation technique if quoted prices are not available. So in market approach, we consider what? The selling price. We consider what? We consider the selling price and any adjustments are required, do it so that you get the value. Cost approach means what? Replacement cost. So replacement cost is what? Today if I go to the market and replace the asset with the same condition, same useful life, what is the value? So that also is an approach. Income approach, in income approach, what we consider the present value of the future cash flow, the present value of the future cash. Income approach will not be given the priority, but first priority will be given to market approach, cost approach, then income approach, as we have seen the hierarchy. Do not compare this. It's a framework by IFRS 13. saying what all are the valuation techniques which you can use to calculate the fair value. So now these are the some points which are important. Now coming to fair value of the liability. Now sir, how do we calculate the fair value of liability? A very important concept for your IFRS 9 financial instruments. If there is an active market of that liability, if that liability is listed somewhere, then use that price. If it is traded on the market, use that. If that is not there, sir, it's not listed or it's not traded, then the liability will be an asset for someone else. If it's a liability for you, it will be an asset for someone else. So please see whether this asset is listed on the market or not, whether there is any active market or not. Then consider that price as the fair value of the liability. If that is also not available, then what is the last thing? The last thing is the present value concept. When you discount the future cash flows, you will say what? You will discount that using what rate? Risk free rate plus company's non-performance risk. So these two rates you will consider and discount the future cash flows so that you get the value of your liability. Now what does non-performance risk mean? See here, non-performance risk means what? Risk that the entity will not fulfill the obligation. That is basically the credit risk we have to consider. So I have not seen this question regarding fair value of liability and the fair value of decommissioning liability, that is dismantling cost, which we have covered in IAS 16 also, provision of dismantling cost. So in one of the past papers, this has been tested. So that is the reason I have written this here. It was in 2013 JH company name. So see, expected labor cost, whatever are the cost, you will include the cost. Then you will say what? You will take the profit margin, because if I will transfer a liability to someone, they will say that we need a margin or markup. We will include that also. Then you will say what? We will add the premium. We will add the premium. What does this premium means? The premium means that the risk, whether today, okay, I'm estimating that in future I will incur $10,000, but I have a risk saying that okay, a risk is that of 5%. I will say that okay, 5% extra I will add. So we will consider that amount. Then you will get the real cash flow, which is your concept of AFM and FM. Then this real cash flow, we should inflate it. Inflation we should apply. We should apply the inflation, because in today's term we are saying okay, what is the cost? What is this, etc. Then what we do, we inflate the values till the number of years, or at the end when you want to dismantle it, we'll consider that. Then we will discount it by what? We will discount this by risk free rate plus company's non-performance risk. Very less chances that these two types of questions will be tested in SBR exam, but if it comes, so be prepared for this so that it becomes easy for you to answer. So with this, the concept of fair value is done. So now let us see the types of questions which are frequently tested in SBR exam. So now how should you answer the SBR question for IFRS 13? First, you have to link to the standard. IFRS 13, fair value is the price that would be received to sell an asset or pay to transfer a liability in an orderly transaction between market participant on the measurement date. Then you should mention fair values of market specific, not entity specific. So the type 1 question that comes in the exam is what's a principal and most advantageous market. So first write down these 2 points, then write down what is principal market, most advantageous market, and write down whether do we consider transaction cost or transportation cost or not, and write down and link your answer to the case given and write it down. You will get the marks. So with this is the type 1 question. Type 2 question that comes in the exam is regarding non-financial asset. Sometimes a land will be there, the company is saying that there is some other use also, so you have to consider the highest and best use for non-financial asset. When we consider this, we should keep in mind what? Physically possible, legally permissible, and financially feasible or not. Then the type 3 question that comes in the exam is what? Regarding the hierarchy. Sometimes what will happen, the level 1 level 2 data will be available, still the management will try to use what? Level 3 to calculate the fair value. They will try to manipulate the book. So in this case, you have to be cautious and read the question. So see now, maximize the use of observable inputs and minimize the use of unobservable inputs. So you have to mention level 1, level 2, level 3. No need to mention in detail. Just mention level 1 means what? Quoted price in an active market. Level 2 means what? Quoted price that are observable, but here and there some adjustment is required. Then level 3, unobservable inputs, that is based on the company's own assumption. Then the type 4 question that comes in the exam is what? Entity restriction. As I mentioned, when we calculate the fair value, we consider what? Asset restriction. We will not consider the entities restriction. Keep that in mind. So now chalo with it. So this is the first question which we have done in a regular class also. We have seen market 1, market 2. Now if market 1 is the principal market, if market 1 is the principal market, then what will be the fair value? 26 minus transportation cost, not the transaction cost. So in this case, we reduce the transportation cost, that is 2 rupees, and we get the answer as 24. If no principal market can be determined, then what should we do? We should calculate first which is the most advantageous market. So 21 is received and 22 here. Can I say which one is the most advantageous? Market 2 is the most advantageous market. Market 2 is the most advantageous market. Then what is the fair value? Fair value is 25 minus 2, that is 23. 23 is the fair value for the second. See, 23. Then we have seen this question also. In this question, they had taken what? The directors are saying that the fair value is based on what? UP. But we have seen here, in this case, the volume of the transactions are more here. But this is based on the company. But we have to see the market point of view. So in that case, Punjab will be what, sir? Punjab will be the market that should be considered as a principal market for fair value. But in the question, they have mentioned that they have used what? Uttar Pradesh as the one to calculate the fair value. It's wrong. So this type of question in your past papers, African and JH company, these are the two past papers in which you have the same type of question. So this one, then for non-financial asset, this question also we have seen. In this question for non-financial asset, what did I mention? When we consider, it should be physically possible, legally permissible, and financially feasible. So here there is a property which is used for industrial use, but nearby the location residential use is also there. Now can I say this is what? Physically possible, because many other plots near me where residential purpose is used. So then they have mentioned that the planning permission for residential use is given, even though it's not given to B as of now. But if B or the company will apply, they will get it for sure. So in that case, we will say that this should be considered, and the transformation cost also we should consider. Here we have seen this. So 6 million was the fair value of the residential property minus 0.3, 5.7. This 5.7 is as per what? 5.7 is as per residential. But if we see from the industrial point of view, it's 5 million. Even though the company is using this for industrial operation, but it is physically possible, it is legally permissible, and then it is financially feasible, it's profitable. So we consider all the three criteria are being met. So we say that in that case, 5.7 is your fair value. Then in hierarchy, this was the question we are done. In this question, the directors were valuing the land based on what? The present value of the net cash flow. But in the recent time, one of the property was sold in the local area and it was similar. So with similar, can I say we should use level 2 input rather than level 3? So this was the question regarding the hierarchy. So then we had done a liability question, and then we had done a question regarding this one, dismantling. So these are the questions. Now then we had done one more question regarding entity restriction. As I mentioned, when we calculate fair value, we ignore entity restriction. We consider only market, we consider asset restriction, or if there is any restriction based on the market by the law or etc., we should consider that. So this also. So these are the four types of questions which are frequently repeated in your exam. So and these are the past papers which you should solve so that your IFRS 13 is good and it will be easy for you to tackle in the exam also. So JH, Merhan, Yanom, Sitka and African company, please do these 5 questions so that your base regarding IFRS 13 will be good. So I hope with this the revision session was good regarding IFRS 13. We have done basic questions also, and I mentioned what are the questions which are frequently repeated in your SBR exam. I hope you like the video. You have liked the video, so please do subscribe to my channel. So for the coming standards, I will be uploading the video. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone.